Managerial Accounting Mini Case Study. Please click play. Please choose your heroes. First Muhammad Iqbal, second Najmuddin, third Adib, and last Amin Mukri. First question, Adib Zaki versus Amin Mukri.
Assalamualaikum warahmatullahi wabarakatuh. My name is Adib bin Muhammad Zaki. Let's see the first answer for the first question. Schedule of expected cash collection for November and December. For this question, the calculation is quite straightforward. For November, we begin with October sales account receivable, and then we add with 75% from November sales. The total, we get 338,200. For December, we begin with 25% from November sales, and then we add with 75% from December sales. The total, we get 355,000 for December. For question B, merchandise purchases budget for November and December. Firstly, we begin with calculate for cost of goods sold, which is 71% from monthly sales, and then we add with ending inventory, which is 75% from the cost of goods sold, and lastly, we minus with beginning inventory from previous month. For November, we get 181,050. This number we get from the question from merchandise inventory from October. And then for December, 191,700 we get from the ending inventory from November. Lastly, for November, we get a total merchandise purchase, which is 252,050 ringgit, and for December, 250,000 and 275 ringgit. Alright, let's see the answer for the question C, which is cash budget for November and December. Firstly, we begin with calculating the total cash disbursement for each month. The total cash disbursement means that the total cash outflow. Alright, firstly, cash disbursement for merchandise, we add with other monthly expense, which is 21,400 from the question. For November and December, we get total cash disbursement of 217,600 for November and 273,450 ringgit for December. Alright, for the calculation of the cash budget, we begin with cash balance beginning of each month. We add with cash receipt, which is from the schedule of expected cash collection, and then we get total cash available, and then we minus with the total cash disbursement, which is cash outflow, and lastly we get the excess or deficiency of cash. But in this cash budget, we only see that there is only excess in the cash. Alright, for November, we get the cash balance 142 ringgit, 142,800 ringgit, and for December we get 224,350 ringgit.
Okay, my name is Amin Mukri bin Muhammad Zain, metric number 1202370. So for the question D, budgeted income statement for November and December, starting with sales, and then we minus with cost of goods sold, and then we got the gross margin, and then we minus the total of gross margin with depreciation and monthly expense to get the net income. So the net income for November is 56,000, and for the December, which is 61,800. And for the question E, budgeted balance sheet for the end of December. For the asset, start with cash, which is we get from the balance cash budget. And for account receivable, we get from the 25% from December sales, which is uncollectible. And then merchandise inventory, we get from ending inventory in December. And then for the PPE, we minus with accumulated depreciation, which is 22,800. And then we got the total asset, 1,464,325 ringgit. For the liabilities and stockholders equity, start with account payable, which is we get from cash disbursement for merchandise. And then the second, we got common stock, which is stat in the question. Then the retained earnings, which is we just add the previous retained earning with the net income for November and December. So the total liabilities and stockholders equity, we get 1,464,325 ringgit, which is balanced with asset.
Second question, Najmuddin versus Muhammad Iqbal.
Question A asks, what is the direct labor rate variance? First, we have to calculate 2,000 hours times with the standard rate, which is Rm 7 ringgit, plus the overtime rate, which is Rm 7 ringgit and 20 cents, times with 1,400 hours, minus with actual hours, which is 3,400, times with standard rate, which is Rm 7 ringgit, and we get the total Rm 2,000 ringgit, 2,080 ringgit. This value is unfavorable. Next, for the question B, direct labor efficiency variance. First, we have to calculate the standard rate times with actual hour minus standard hour. So we take the standard rate, which is Rm 7 ringgit, times with the actual hour, which is 3,400 hours, minus with Rm 7 ringgit, times with 4 hours, times with 800 units, and we get total Rm 1,400. This value is favorable. Next, question C. What is direct materials price variance? First, for iron, Rm 2 ringgit minus Rm 2 ringgit times with 3,900, and we get the total is Rm 0 ringgit. This value is favorable. And for copper, we calculate the Rm 3 ringgit and 10 cent minus with Rm 3 ringgit times with 2,600, and we get the value, total value of Rm 260. This value is unfavorable. For question D, what is direct material quantity variance? First, to find the value is we have to times the standard price times with actual quantity minus standard quantity. For iron, we have to calculate 3,900 minus 4,000 times with Rm 2 ringgit, and we get the value negative Rm 200 ringgit. This value is favorable. For copper, we have to calculate Rm 2,600 minus with 2,400 times with Rm 3 ringgit, and we got the value of RM 600 ringgit. This value is unfavorable.
Okay, now look at the answer of E. Variable manufacturing overhead. 12,000 minus by 3 ringgit multiplied by 1,400 plus 2,000. Overhead expenditure variance change is 1,800 ringgit. The answer is unfavorable. For the F answer, 3 ringgit multiplied by 1,400 plus 2,000 minus by 3 ringgit multiplied by 4 and multiplied by 800. The overhead expenditure variance change is 600, which is the answer is unfavorable. Now let's look at the answer of G, variable manufacturing overhead. Actual fixed manufacturing overhead minus by budgeted fixed manufacturing overhead. 8,800 minus by 2 ringgit multiplied by 4,000. Overhead expenditure budgeted variance is RM 800 and the answer is unfavorable. For the answer of H, we can see that 2 ringgit multiplied by 4,000 minus 2 ringgit multiplied by 4 multiplied by 800. The overhead expenditure budgeted variance is 1,600, which is the answer is unfavorable.